Welcome to another episode of G to a Milli. I'm having so much fun making this show where I compound from a G, trying to get to a million with my stock portfolio. Y'all can follow along with me. I'm just trying to educate the people and hustle myself to build for retirement here. So big update. We are on day 12, 2,700 in the account. Basically what happened is I deposited $1,500 because I had Tesla stock and Coinbase stock were down. It was my birthday on Friday. I was like, oh my God, I need to buy Tesla and Coinbase. They're down huge. I had $1,500 of referrals from public because I've been getting referrals from you opening your brokerage account, and I'm putting it right into my snowball to watch it grow. And before I get too much into this, I know a lot of people have been thinking, including my homies, like, what's up? You know, you're just putting money into the account. How are you going to get to a mill that way? I'm like, yeah. I'm hustling. I'm not trying to put myself in a box to follow these lame rules. I am hustling to put money into my G to a Milli account and get this popping off. Like, I'm trying to get to a milli quick. So I saw Tesla and I'll just play this stuff right now. So I saw Tesla and Coinbase were down. So I had $1,500 for my public account and I'm putting it in. I'm also going to put in all my X earnings and YouTube earnings from this show into the snowball so you can watch me compound. I want to encourage hustling. So I basically had 1,500 extra bucks that you just saw in referrals from referring 30 people to open new public accounts. Thank y'all for doing that. Hope y'all are rolling the snowball with me. And then I put in 1,500. This is after hours Friday. I'm like, is it going to let me trade after hours? Public said they got after hours, but who knows? 1,500 available right away, as you just saw. And then I tried to buy Tesla and Coinbase. It didn't work because I put in the wrong type of limit order. Then I'm on my phone 2 hours later. You can see it'll show you 2:51 p.m. And I was like, wait, I'm going to give this another try. And I realized that I just had to put in a higher limit price. So I was able to put in free after hours trades with my public account because I have public premium, which you got to pay $10 a month for or something. But anyway, I got the trade after hours for free. Here you can see me buying a little more Coinbase. It was down huge with the ETF approval. And I was like, that's hella good for Bitcoin. Why is Coinbase down? Oh, because everyone's going to buy the ETF instead of buying through Coinbase. Maybe. But I think if it's good for Coinbase and crypto, or good for crypto, I think it's going to be good for Coinbase. And so I was fired up at this chance to basically average down on Coinbase. So I did that, put about 50-50 in Tesla and Coinbase here with my extra cash. Tesla was down to 218 to about $700 billion market cap. I love it at these prices. I'm hoping it keeps going down. And so I bought, like, I think it ended up being 3 more shares of Tesla there. And I feel like you got to jump when you feel it. That was what I was doing here. Like, my favorite stocks are down. You know, if you're thinking super long term and it's a huge red day and everything's, you know, it's a bloodbath in the markets, that's when I get excited to be like, ooh, this is like nothing really changed about Tesla and Coinbase relative to 2 days ago, but the stock is way cheaper. And so now this is a huge opportunity to just average down. And that's what I did. And then both my after hours trades that I made at 2:51 p.m., the market closed at 1 p.m. on a Friday on my birthday, went through. So I'm checking them and you can see I'm like, wait, my average cost worked. And basically I got a little bit more stock in Tesla and Coinbase and averaged down, and my account was at 2,600, even though I'd put 2,750. So I'm still down from what I put in, but we're going to go over that more in a sec. Then you can see here that I got some reward from public where I referred 3 people to new accounts like a long time ago with my account and had 3 $20 rewards. So I basically just put all of those into Tesla. And so I adjusted that as 60 more bucks into Tesla. And I put the S&P 500 at 4783.3 for my tracking system. And my account was at 2664. So then I still had 200 in cash because I could only buy whole shares. And here you go. You can see me buying Bitcoin. This actually took place like a couple days later on the weekend. So Bitcoin trading was on the weekend. That was fire. I bought about $194 worth of Bitcoin. It was $197 with fee. So a little bit of a higher fee, but I don't know. I think people overplay that. It's like a 1.5% fee, 2% fee to buy Bitcoin. It's like, yeah, like you got to pay money. You know, ended up being $3 to make the trade. I think I'm going to crush that in my returns. But if you want to buy an asset like a service like public lets you buy it, it costs them money to do it. So that's it. That's my update. I made some power moves. Now I'm going to show you what my public account looks like when it's all said and done. Here we got the account right here, 2719 in the account right now as I'm making this on super late Tuesday night. You can see that I got 48% of my portfolio in Tesla, 44% in Coinbase, 7.3% in Bitcoin. So I look at Coinbase and Bitcoin as like kind of the same crypto positions. Honestly, Tesla's still my biggest position with $1,300 in Tesla, $1,200 in Coinbase, and $200 in Bitcoin. Honestly, the one reason, and let me give you my Bitcoin bull case here. So I've been little like story time, I guess. I own Bitcoin way back in the day in 2013, 2014. And I was holding on to my Bitcoin, and then by 2017, Bitcoin skyrocketed. I bought it like 500. It skyrocketed to like $20,000. I was 6 months into HyperChange. I was just launching my channel. I sold the Bitcoin for 20 grand that I bought for like 500 or something, and that gave me 6 months of rent to pay my rent while HyperChange earnings got off the ground. So like, I'm a huge fan of Bitcoin. It changed my whole life. I was a super nerdy economics finance student at NYU, and I couldn't understand why this wasn't the most talked about thing at school at Stern, which was like, everyone's laughing at Bitcoin in my international finance class, when the reality is how is this not the future of international finance? No, it's just decentralized code as a way to store value versus fiat government currency, like fascinating. And so I've always been obsessed with the idea of Bitcoin and kind of this Illuminati, break the rules anarchist vision of, do we need to rely on central banks and the Federal Reserve, or is there something else? And Bitcoin, me cashing out of my Bitcoin, and I've since rebought my Bitcoin since then, but that let me bootstrap my business. So not only am I like intellectually fascinated by Bitcoin, but it literally changed my life, because then I started HyperChange, which is like my whole life and scheme right now. So here is, I'm going to show you all, this is CoinMarketCap, just a simple website to show the market cap of different crypto coins. 842 billion is the value of Bitcoin here at 43,000. So basically what that's telling you is price per Bitcoin times all the Bitcoins in supply, $842 billion asset, Bitcoin. That is huge. So what's my take on this? Basically, there's about 100 trillion of wealth in the world. And I think we're at this moment where everybody's pricing in massive success of the dollar. Everyone thinks it's inevitable that the dollar will be the store of value in the future. I think that's already happening. We're already seeing that decay. Trust in the dollar. Is it the yuan? Is it the euro? I think there's more trust in this decentralized system of code, Bitcoin, than almost in a government. And we're still in the early stages of that shift. And I think Bitcoin could easily, it's not going to overtake the economy. It's not going to be used for all kinds of payments. I'm not even relying on that for my thesis. I'm just saying, if 5% of the global machine allocates money to Bitcoin, which I think is fair, 5 trill out of 100 trill, I think that's very reasonable. I think it could easily be 10 trill. And so I think we have a 5 to 10x in Bitcoin over the next 5 to 10 years, safe store of value. And then I wanted to say, okay, I own Coinbase, but what I really like is Bitcoin, right? Like, I love Coinbase as this, $30 billion market cap play on the $2 trillion crypto ecosystem, a crypto bank that's soon going to be worth hundreds of billions. But I also don't want to get caught up in trying to be smart about which crypto company is going to win. And I also just want some Bitcoin. So I like my position now of Coinbase stock and Bitcoin, mixing up. I think they're the same kind of high level thesis. But I love both those assets. So that's my take on Bitcoin: is digital gold, 5 to 10 trillion worth of new digital gold to store value in the digital economy. I think we have, what's that? 500,000 a Bitcoin, potentially. So I don't know. That could be a scenario, 500,000 to $1 million a Bitcoin. I could see in like 10 years or so. And so I love it as a way to save and store value, but I still think it's risky. I fully don't understand how to code. I don't know. So I still think Bitcoin's risky for everyone out there, but that's what I'm doing. That's why I'm hyped on it. And now let's take a look at my public account here. 2720 is my account. Also, just to wrap up my shout out, and everyone's like, oh, Gally, you put in, $1,500. So I'm going to keep, now this is up to 1,650. So I have another 150 here. I am going to keep putting money in as fast as I can into my account. And you can go to public.com/hyperchange. They have a special code. I don't know how long it's going to last, where you get $25 worth of free stock. If you join through my code, I get $50 for my referral fee. And that's just, it's not like I even negotiated that deal. That's just the deal Public had for influencers going forward. So that's why I'm doing it. But, and I don't know, it's learning a little bit of inside baseball here. It's like, why would Public do that? Why are they paying you so much? Is that fair? It's like, don't have a sponsor for the show. You can't even sponsor the show. It's just all companies I like and products and services I use. And I think this is a huge win-win for public of me approaching them saying, I want to make this show. I love your product. I can inspire a generation and show them how to invest on your platform because I'm literally going to eat my own medicine and do it and use your platform. And they are going to hook me up with $50 per account and incentivize partnership to basically make this all happen. So you're going to see me scheme. And this is what's crazy about the show. Like, I want to put my YouTube earnings from that you're watching the show with right now into my account. I want to put my earnings from X that I earned by making content about G2 Milli into my account. I want to put earnings from referral fees from public and get 1,000 people to open brokerage's account and get $50,000 from that and put that in my account. And if you think about G2 Milli already at almost 100,000 impressions across Twitter, X, and podcast, getting, paying me a little extra for an account sign up, which is what public's doing, is I think a genius financial move on their part. It's an amazing marketing move. So it's a win-win-win. But the point being here is I kind of want to explain my strategy and scheming and say, I am going to be hustling as fast as possible to hit 1 million. I'm not following these rules. I still am going to add $250 every 2 weeks on a Monday. But if I have extra guap for my side hustles, I will be putting it in this account. And I think, my take on it is, not everyone's going to be able to do that, and I don't want to make the show seem inaccessible or unattainable, but I also want to inspire you to hustle. Like, come up with a side hustle. Figure out ways to get more money in your account. You see your 2 favorite stocks down, and it's not like I got paid out $1,500 from public. I still haven't been paid anything. I don't even know how getting paid for the referrals works. I just fronted myself $1,500 and was like, shit, I have $1,500 worth of referrals. I was saying I was going to put that in my account. My 2 favorite stocks are down. I can figure out how to just transfer money in my account right now and buy my 2 favorite stocks while they're cheap. So I like to be transparent and showing you how I hustle, and that's just what's going to happen with the show, and I think it makes it more exciting. And anyway, so that's a little sidetrack about the show. But now I want to get into your questions because I got some amazing questions, and actually one of them is from my homie, Colin. So absolutely huge shout out to my homie, Colin, for hitting me up and calling in the show. Let's hear what he got.
Hey, G. Filchi, this is Colin, calling in from Orcas Island, Washington. Long-time listener, first-time caller. I'm just beginning my investment journey at 30 years old. I'm hoping one day that I can be, 50 and just living the life of luxury, traveling around to beautiful countries like Greece, perchance, Italy, perchance, maybe France, perchance. And just spending months there on end, just soaking up a tan, getting some olive oil skin, just feeling good. I don't got the finances for it now, but in 20 years, I want them. So I have about $400 that I feel safe investing out of each paycheck. So I was hoping you could kind of give me your advice on how to invest that money, that $400 biweekly, in a variation of stock market investments and retirement savings. Thank you very much, Gally. I hope you can help me achieve my dreams of having nice olive oil skin abroad. Thank you very much.
Okay, shout out to Colin. Huge homie. Love that guy. But anyway, he's hilarious. And $400 a month into your savings account. Love that. That's the move. The whole mindset of I'm going to save till it hurts. And I love the idea of it's great to save for retirement and all this stuff, but the whole point of money is freedom, and shout out to Dick McCormick, one of our mentors. He ran our stock club, and he would always say you don't really want money just to be rich and to do all that. But when your friends say you want to take a vacation to Europe, you want to be able to go and not worry about it. And so I feel like Colin's question ties into that, which is so dope, which is what's the point of all this? Well, you want to travel with your homies, or take your family to Europe when you're 50. That's love that. Okay, so how are we going to help Colin do that? The whole point here is, first, a little bit of a bummer. This is not financial advice, so you're not allowed to listen to what I say and sue me or whatever. So I never give financial advice, but I tell you what I would do and just how I would think about it. So I think save till it hurts. Step number 1, put as much as you can into a separate account. Don't think about it. And depending on your goals, I think right now we're in a unique time where it's, especially with public, they offer 5.2% on your money. A lot of brokerages or banks don't. You can get 5.2%, which is backed by the US federal government. I do not know how long that's going to last, but 5% on your money. So you could just set up a deposit of $100 a month, goes into there, or $100 out of your 400 goes into there, and you're getting 5% compounded, super risk-free. The other tool that I think is just the GOAT tool, and I'm going to show the chart of it again. The S&P 500. I cannot tell you how much of an amazing thing this is. Like, it just is. It's almost like the whole show is like, I've already been beat by the S&P 500. Oh, that's right. I forgot to tell you how I'm doing relative to the S&P 500, so I might as well show you that right now. So my portfolio is at 2719 with $2,810 put in. So I'm actually, and I included the free $60 that I got worth of Tesla stock there. So it's all accounted for. So I'm down, whatever. $90. If you put it in the S&P 500, you'd be at 2822. So you'd be up $12. You deposit, I'm going to say that again, deposited $2,810 in my 12 days since launching this theoretical challenge. I am lost money, almost $100, and I'm down to 2719 is my value. If you'd invested that same 2810 in the S&P 500, you'd be at 2822. So you'd be $100 ahead of me if you would just put it in the S&P 500. That's why I feel like the whole point of this show might be that screw trying to beat the stock market. The stock market's already been beaten by just investing in the stock market. Like, you can't, this S&P 500 is this incredible equation that over time, and all the greats say you should put your money in this is what I have my mom invest in. Like, it's a diversified portfolio of 500 companies, the biggest companies ranked by market cap, constantly adjusting: Microsoft, Apple, Nvidia, Tesla. Those are going to be a lot of your holdings, and go through the list of the world's /US's 500 biggest companies. And it always outperforms. Crappy companies get dropped out of the index. New and up and coming ones get put in. This is how it keeps innovation, new blood. It's constantly adjusting. It's an incredibly beautiful mathematical equation that may never be beaten. So, and it's not even worth trying to beat in some ways. So I always say, like, if you're not trying to obsess with all your time into the stock market and all of this stuff, put money into the S&P 500. And actually, shout out to my grandpa, Papa Al, because he put a tiny amount of money when all of his grandchildren, my cousins and I, were born, put like this super tiny amount of money in the S&P 500, and then gave it to us when we were 18, and taught us the power of compounding with look, I started with this super tiny amount of money, and look at how much it grew in those 18 years. That's the power of compounding, most powerful force in the universe. So I love that idea. Like, your kid is born, put a couple $100 in the S&P 500, forget about it. You know what I mean? So I think if I was starting a portfolio from scratch and didn't want to worry about stocks, I'd put, $100 a month into 5%. That's super easy. Another $200 a month into the S&P 500, super reliable, and I love it. And then another 100 out of your 400, and then another $100 a month. Maybe it's riskier stuff. And that's what I always tell for my mom and anyone. It's well, if you want to invest, I actually think you're better at investing than you think, but don't overthink it. You're better at investing than you think, but don't overthink it. So you could have bought Netflix, Amazon, Starbucks, Lululemon, Tesla, Apple. These are incredible stocks over the past 10 years. And I just say that as my lifetime. When I was in a high school stock picking class, in my freshman year of high school, it was business English class. We had stock picking, and I think this was what got me into it. And I remember we just picked Netflix, Amazon, I think maybe even Tesla, all these companies that were just super we thought were awesome, and they crushed it. And so I think people overlook the amount of insight they have as a consumer of what companies are going to get bigger in the future. What companies do I buy products and services from? Think about those, and them. The second you try and get fancy and buy an oil stock that your homie recommends, or some, new battery lithium supplier that you've never heard of, if you never heard of the product and you don't know the CEO, you probably should not be buying that company. So I just feel like way too many people try and get fancy when they shouldn't. But I like to tell people, or I like to, for me personally, you see me, I'm not buying the S&P 500. I like to pick my stocks. So I like to be super concentrated, in companies that I love that are a little bit risky. I only pick the ones I really like: Tesla, Coinbase, Bitcoin. That's all I own right now. And I think if you're starting a portfolio, but you want less risk, you're saying that's too volatile to own just a couple crazy stocks. Well, I think you can do a really nice balance and blend of saying, okay, I'll put 80% of my money just in the S&P 500, and I'll let myself play with that 20%. And then I'll calculate who's doing better. And I just think, and it's also important to learn over time. Like, don't kill yourself if you're not crushing it right away. It takes time. Tesla stock was flat for like 4 years, and I just kept buying hand over fist, and then it was going down. The more it was down, the more I was buying, and then now it's paid off. After 12 years of me investing in the stock, it's like insanely paid off, but you need a lot of discipline, and sometimes stocks can go sideways for 5 years. And you just got to keep buying. And it's all about the intrinsic value of the company versus what it's trading for. So when you buy Microsoft stock, you're not paying $380 a share, you're paying $2.9 trillion. You're paying $380 a share times however many billion shares equals $2.9 trillion. That's what you're buying. You got to pretend like you're buying the whole company. So if you're going to buy, Tesla, it's at 700 billion. Is that fair? What is it really worth? I think it's really worth maybe 500 billion today, but it's soon going to be worth 2 trillion. So I'll pay 700 billion. And if it goes down to 400 billion, but I still think it can hit 2 trillion, I'm going to start buying a lot more. So you got to, if you're going to get into the stock game, you got to know, not just I like this company, but what price is that company trading at? Why does that price make sense for me to buy? I think that's a good thing to have a handle on, but that takes a lot more work to do. So in short, I love the idea of just committing to add to your brokerage account, just like I'm doing. I think that's the move. Just put money aside. That's 90% of the battle, and have discipline. And don't get fancy. I always think for people who are starting out, or just what I would do, and if you don't want to get too into it and you're not confident, and let's just say I had no prior investing experience and I was just starting with $400 a month. I like the idea of 100 into my 5% treasury yield, 200 in the S&P 500, and then 100 into stocks I play with, and just kind of feel it out from there, and just start, getting more experience. So anyway, that's my take on Colin's question. Bro, I cannot tell you how hyped it makes me that my homie called into this show. All my other homies who I told to call in, y'all need to step up. No. Okay, now we're going to get to some other viewer questions, and I'm just going in order that I heard them now. So here's another question.
Hey, Gally, this is one of your international homies calling in. My name is Mark. I'm from Australia and I'm 22 years old. I'm currently sitting on 230 shares of Tesla stock, and I'm making roughly $56,000 per year. I just wanted to talk a little bit about interest rates and borrowing money to buy shares. So basically what we've seen is, as the interest rates have gone up, people have not been buying cars as aggressively due to the fact that it costs them more money to, right? And as a direct correlation in the stock price, quite easy to come to that conclusion. So what I think is going to happen when interest rates come down, which I'm betting they will, there's going to be a meteoric rise in Tesla share price. So because the cost of debt is so high, there's incentive to not borrow to buy shares right now. But if you're betting that interest rates are going to come down, doesn't it make sense to borrow money now, buy shares at their compressed price, and then refinance the loan later on when the interest rate is lower? And that's exactly what I'm in the process of doing. So I've taken out a $17,000 loan. I've purchased the shares, and now we're going to see what happens with the interest rates. So yeah, just curious on your perspective of borrowing to buy shares. Is it too risky? What do you think about it? And where do you see interest rates going? What's your best guess? Thanks for taking my question.
Okay, this is a tricky one. So where are interest rates going? I think it's really hard to know, just in general. But if you really were like, Gally, what do you really think? I'd be like, okay, I think interest rates are going to go down because they've gone up a lot. I don't know if we've seen the ripple effects of them slowing down the economy yet, but I think interest rates are going to go down. So interest rates are this crazy lever. And when I really understood how interest rates work, this is when I started believing in the Illuminati, honestly, because I was like, you're telling me there's something called the Federal Reserve, which is owned by who the hell knows really who, and they get to decide this thing called the interest rate, which is the baseline lending rate for the entire US and basically world economy. So they're going to spike it up when they want the thing to slow down. They're going to drop it when they want to accelerate. So it looks like now they're going to start dropping rates. But I think you're getting into, so that's one thing about interest rates. And you got to remember, like, just a high level theory. So the S&P 500, let's say it trades at a 20 PE ratio. So let's just do a little exercise here. So a 20x earnings ratio on the S&P 500, That's a 5% earnings yield. 21 divided by 25%. So you're getting 5% when you buy the S&P 500 in terms of earnings for every dollar you spend. So that's kind of inverse with interest rates. Like now we're at 5% is like the risk-free rate of cash. So it's like, would I want to risk buying a basket of companies or just get almost a guaranteed zero risk bond from the US government at 5%? So that's the sort of inverse lever. The higher interest rates go, the more that multiple on the S&P 500 needs to compress to make it fair. Like if the PE on the S&P 500 is 10, then I'm getting a 10% earnings yield on the S&P 500, which seems more fair if the government's just giving me 5 for no risk. So you have this inverse thing between stocks and interest rates. So as interest rates come down, you should expect that multiple to expand. So that's why when interest rates were 0, we had absurd multiples, because even a 1% interest rate is equivalent to 100 PE ratio in terms of earnings yield. So I think you might be right about interest rates coming down, but the other part of your question here, taking out debt to try and predict all this, I mean, once again, the show's not financial advice, but I never do debt. I hate debt. I've done debt once in my life. I have one kind of debt right now, and that's to buy SpaceX stock. I think that's a super unique thing that I can get into later. But I think stay away from debt. Nobody in financial spreadsheets or markets is going to talk to you about peace of mind. I think that is so valuable. Your peace of mind. Like, well, you could get this much return. You could do this, and you could do this, and we could say we 1%, blah, blah, blah. And gets like, well, I'm going to be stressed out because I'm levered and have all this weird complex shit I don't understand, instead of just using the guap you have to buy shit. You have X amount of money, that's how much you can spend. That is incredible financial discipline. This whole thing of I should spend more than I have and go into debt to do it, whether it's to buy a car, to buy a house, to buy a stock, avoid it at all costs. That's just my motto. I'm not telling you what to do. I'm just telling you what I do. I never do that. It has kept me so much peace of mind that I never went into debt to buy Tesla, and maybe I left a ton of money on the table because I knew it was going to go way up, put all my net worth in, could have put way more in, and made way more money if I just levered. But it's like, that would have stressed me out, and I wouldn't change a thing. I think it's so important to have peace of mind and stay away from all kinds of debt, because what will happen when you have debt, the stock price goes down when you don't think it can, and then all of a sudden you have to cover your margin, and the debt people who you borrowed money from are going to call back and be like, well, we need a little bit of money because your collateral, aka your Tesla shares, are going down. So guess what? We need you to put up money. So how are you going to put up money? You're going to have to sell Tesla shares at the bottom to pay off this loan. So that's going to screw you over. And that's just why I personally do not ever like debt. And that's just my MO. Anyway, love the question though. And it sounds like you're scheming. So good luck. Next question.
Hello, HyperChange. This is me, Tom, from the Netherlands. And my question is about building wealth. I'm 29 now. I have around 30,000 euro in savings. And I'm always jumping in and out of investing. I bought some Bitcoin at 10,000, sold it later, a little bit of profit. But my question is, I have the feeling if I now start dollar cost averaging on Tesla, that I will not build up enough wealth because the company is already too big. So I'd like to know, what are your thoughts on that? Let's say I invest 500 euro per month or per 2 weeks, then I feel like even if the company doubles or triples, it's not going to get to a level that really makes a difference because the company is already too big. So maybe I should look for a company in a $5 to $10 billion range. Let me know your thoughts on that.
Okay, great question here. And this is actually something I've been thinking a lot about too. It's like, okay, I'm buying Tesla hand over fist at 700 bill. Is it really going to get to 7 trill and make me 10x my money? Like, it would be the biggest company in the world times 2. So, but also risk has been decreased in Tesla because they're super profitable. They have a really strong balance sheet. But I think your question here, my take on this is overthinking. Don't overthink. Like, when I'm thinking about what to do with my capital, it's okay, my Tesla stock, 700 billion to 5 trillion in this many years. I can compound it, 20, 25% a year on my money. That's a really good rate of return for something I'm super confident in and want to support. And so I think you just got to think of it like that. First of all, Apple was the biggest company in the world, and everyone thought it was too big a few years ago at 700 billion. Now we're at a couple trillion. So I think big numbers keep getting bigger. That's step one. We're going to have 5 $10 trillion companies soon. So with inflation and just how everything works. So you got to keep that in mind. But also, I just think don't overthink it. It's like, who cares how, it comes back to, this is what it's worth today. This is where I think it can go. So I'm going to play this. If you Have a $5 or $10 billion market cap company that you think is that you understand really well and are super confident about, and that's awesome. Go for it. But you don't want to sacrifice quality, and you don't want to sacrifice what you know and get into shit you don't know because you're just trying to, you're like, well, this isn't going to go up as much. I want to get fancier. I feel like I'm always against getting fancy. Like, at least that's what I do, is just buy and hold. Buy a little more when it goes down. And like, yes, I think Tesla's valued massively. You're never going to get the returns that you did when I bought it in the public market, and it was $3 billion market cap. Now it's 700 billion. So that's like over a 200x in valuation in like the past decade. That's insane. But so I'm never going to get that again, but I might get a 10x at less risk. And so it's just about understanding that. And then, yeah, I don't know. Yeah, that's how I think about that. Okay, next question.
Hi Gally. So my question is about evaluating if the current price is right at the current time, and also on how to evaluate the future potential. I've seen some videos on models and napkin math. Maybe you could explain how to approach such a thing. Thanks.
Ooh, okay. Valuation. How do you know if a stock is cheap? I love this question. So I came up with my own system for this that no one in the whole world uses except me, but I love. So I'll just tell you what that is. And that's years to pay back. So I think about this like, so I try and simplify everything. Like, if I owned a business, let's say it was a coffee shop, and I bought it for $2 million, how many years would it take for that business to pay me back in profit? If it's making $100,000 in profit a year and I bought it for $2 million, that's 20 years. 20 years to pay back my initial capital. If I'm taking out Apple, it's at a 30 PE ratio and earnings stay flat for 30 years, I'm going to get a 30 years to pay back. So I think that's a fair number, which I think calculates a lot of growth that I use to value companies, like 700 billion. So when Tesla was at 30 billion, I was like, okay, I could see Tesla getting to a point where they're making 30 billion a year in profits. Their years to pay back could be paying this back every year to me. So I want to own that. When I think about Tesla today, 700 billion, it's like, I mean, it's going to take them 7 to 8 years or more to pay that back in a best case scenario. That's already hard. They have to pay back $700 billion. So that's $700 billion of profit. So, and it's not like there's a specific formula equation here. This is just how I like to think about whether shit's cheap or expensive. I look at a company with a $1 billion market cap. They're losing all this money. They have no potential. It's like, well, when are they going to pay me back $1 billion? Like years, never. You know, they're going to have to keep diluting. So it's like, I don't want to own that business. And I think that's it's kind of like the PEG. You have the price earnings ratio, and then you have the PEG, price earnings growth ratio. So that's like adjusting the price earnings ratio for growth. And they say you want to buy a PEG under 1. So if the PE is 20, you want it to be growing over 20%. If the PE is 50, you want it to be growing over 50% in earnings. So I think that's another good rule of thumb too. But it's even more interesting than that, because the stock market's all about psychology and this forward-looking painting of what the company is going to be throughout its life. So right now, Tesla has a painting that says, I'm going to sell 10 million cars. I'm going to solve a portion of the energy storage problem. I'm probably never going to release a bot, and if I do, it's not going to be great. I'm probably not going to sell self-driving, and if I do, it'll be okay. That's the painting that Tesla's painting with $700 billion. I want to invest when I'm holding it till 10 trillion. So the painting for the market for Tesla to be worth 10 trillion has to say robots are taking off. FSD is taking off. This company is going to keep expanding. They are going to own energy and transportation across the globe and have a massive market share of that. If that's the painting the market's seeing, I think they're going to value Tesla at around 10 trillion. That's a high level random way to kind of think about that. But if you think Tesla could make a couple $100 billion a year in profits, eventually when all of this shit takes off, then 700 billion is going to look cheap. So I don't know if that analogy works, but I like to frame everything as just like a super back to the roots thing of like, if I was buying this whole business, would I want to buy it? Because I wouldn't buy a coffee shop for $2 million that only made me $100,000 in profit each year. It's going to take me 20 years to pay back my investment. Nah. But if it's a $750,000 coffee shop that's making $100,000 a year, but I think I can get that up to $200,000 a year, I like that business. So that's just one way that I think about it. I hope that helps. Next question. Let's see what we got.
Hi, Gally. This is Cap calling in here from Ontario, Canada. Big fan of HyperChange for years now. Just a question here. What do you think about these yield max stocks like CONY or TSLY, where you're getting a regular income instead of waiting for that one big payday in the future?
Ooh, okay. High yield dividend stocks. Love this question. I mean, the idea of how do you get paid back from a stock is fascinating. But here's the catch. A lot of dividend stocks are just sketchy, and it's like, oh, we're paying you 10% of your money. Well, it's like, okay, well, how are you paying me 10% every year? Like, is that sustainable? I would just make sure that I'm really understanding how the companies, are they making 20% a year? If they're $1 billion company and they're paying a 10% yield, that's $100 million a year that they're just paying people. So they better be making like $200 million a year in profits if they're paying out $100 million just to shareholders, right? So you got to make sure your company financially can cover your dividend. I think what you'll find is the shittier quality of the company and the shitter quality of the dividend. Like the second you see something that's a 15% yield, I'm almost not even going to look at it because I'm going to say that's a shitty company. And that's why the market's letting you get 15% of your money every year because they think that's going to stop pretty soon. So there's always a balance with that. I personally don't know the names that you've mentioned. I can't think of one stock that yields a couple percent, more than a couple percent that I really like Tesla, Microsoft, or sorry, not Tesla, Apple, Microsoft, Costco. You look at the yield on that, it's like 1 or 2% max, I think. Correct me if I'm wrong, but great companies who you're getting a portion of the profits, it's a very low yield right now. And I've just seen that for a while. And every time I see a yield higher, it's a sketchy vibe. But I don't know. I stay away. I don't play with the yield game because I'm earlier investing in growth stocks. So it's hard for me to think about this. But I'm also do think in the long run, like I tweeted this today, how's Tesla going to pay me back? Is it going to be dividends? Is it going to be share buybacks? Is it going to be free Tesla bots? Or does the stock just go up forever and they never pay anything out? Like, how does that work? I also think here's another interesting thing about that is like, well, if you own Tesla, you own these assets that produce renewable cars, renewable energy. If the world crumbled and we went to this apocalypse-based system, I think Tesla will be worth a lot. Like if I'm an owner in Tesla, that means I get a little bit of the energy they produce when the apocalypse hits. Like then Tesla shares are going to be worth a lot because there's actually something behind them. So I think that's how you want to think about your ownership in a company. Like what do I really own? Like Tesla is incredible technology, engineering, massive factories around the globe, massive batteries around the globe. Like I like that asset, whether it's priced in Bitcoin dollars or cans of tuna because the apocalypse hit. And so I never try and get distracted by like, oh, it says an 8% yield, but I've never heard of the company. It's like there's too much. I don't want to deal with the risk associated with that. And good companies aren't paying those type of yields. I don't know. That's just what I've seen, but maybe I'm wrong. Now we'll go to the next question.
Hey, Gally, this is Zach, a longtime listener of the channel. So my question is actually kind of different than most. So I actually ended up opening a Roth IRA for both of my sisters back in 2020, and I've been actively managing their accounts for them. But unfortunately, back in the day, I kind of got into the ARK-K fund hype, and so I averaged their funds into that account for probably about a year and a half, and it took quite a beating. And then I decided, okay, this is a little too risky. I'm going to go ahead and move new funds into the S&P 500 for a little bit more stability and just kind of let their ARK-K shares ride from there. And even though they're still quite a bit down on that position, I was just going to hold it until it either breaks even or, they're in some profit. Honestly, I was thinking about dollar cost averaging out of that fund when it gets to that point and just put those funds in the S&P. But my question is, if you were in my position, would you just cut your losses and sell everything and put them right in the S&P 500? Or do you have like a positive outlook on ARK-K over the next 5 years? And would you just kind of hold on to those shares? All right. Thanks, man. Appreciate you.
So you ended with the question that you should be asking you. Don't let the tail wag the dog. That's what I would do is also never financial advice on the show. But what I would do is don't let the tail wag the dog. If you're just holding some shit because you're waiting till it gets to break even because you have some OCD thing going on, I don't like that idea. I never do that. If it's a shitty company and I'm done with it and I was wrong, I sell it, I move on. I want to put that money in something good. So that's just my take on how I do shit like that. Also, the Roth IRA idea, I got a lot of comments on this. So you can put up, a lot of people in the US, ask your tax accountant person about this, but you can basically put up $6,000 in what's called a Roth IRA that doesn't get taxed as long as you take it out when you're 59. Basically, you can add to this tax-free account. So everyone's like, "Oh, you could be growing your money tax-free. It was an IRA." And I hear you, but I just want to make it simple. But I do want to let people know that if you're super young and you're under certain income thresholds, then I think you can add it to this account that's then tax-free. My devil's take on that is I never signed up for one because I wasn't allowed to buy crypto in it. I wanted to buy crypto. I was like, I'm going to try and spend my money way before I'm 60 and old. So I don't want to be locked into not taking it out till I'm 60. So, I'm trying to hit a G to a milli ASAP and then start spending it on, my next crazy company in 5 years. I don't want to be tied down until I'm 60. So, but I do think the idea of saving for retirement with a tax-free Roth IRA is something that a lot of people should consider, and it's really cool. And more on that, I haven't looked at, to be honest, I haven't looked at the ARK investment fund. I don't own any ETFs or mutual funds. I don't know. I really do like Cathie Wood though, and ARK. I'm a huge fan of them. But I don't know. The numbers speak for itself. The returns haven't been that great. You're better off buying just Tesla stock. So that is what it is. But yeah, best of luck. And shout out to you, bro. You're putting guap away to help with your sisters and managing it to help them with their retirement. Like that, shout out for doing that and trying. Even if it's not going perfectly and whatever, but like, I think you're trying to doing some awesome stuff there. Okay. I was going to stop there with questions, but I've got like a bunch more and a little more time. So I'm going to start doing that and answering some more questions. Let's roll.
I'm Jill, 23 years old, and I own 300 shares of Tesla and some Bitcoin. I was wondering, at what point do you think is it even worth it to try to pursue an active investment strategy? Because I kind of get the feeling that it is a lot of times easier and more worth it to trying to just get better at my own job as an electrical engineer instead of trying to find the next big investment or to keep up to date with my Tesla investment or what is going on with Bitcoin or stuff like this. Yeah, I would like to hear your take on that. Thanks in advance.
Ooh, love this question. And I feel like obviously get better at your shit and make more money because you're a better electrical engineer. I think that's obviously the move. And also just in terms of active and passive trading, like, yeah, I do stocks as kind of my job, but I also am super boring. Like I bought Tesla for 5 years straight. It was my only stock. It was my only move pretty much for 5 years straight. And so that discipline and not getting fancy, I think is super important, but also I love this idea. And I heard on this crazy podcast, the idea of Bitcoin is it kind of always goes up as more economic capital gets put into it. And then doctors, lawyers, you don't have to worry, creators, you don't have to worry about, oh my God, I made money. Now I got to save it, invest it, manage my portfolio, blah, blah, blah. That's so stressful and time consuming and hard. And imagine if you could just save money and the US dollar wasn't eroding in value and we weren't getting diluted by inflation constantly, and you could just make your savings and they would grow for you. I love that vision. And I think the world would be so much better if all this time that we're scheming with this show and how to manage my money and how to invest was not something everyone had to do. And you could just put your money in Bitcoin or something and just work on your craft. I wish the world was like that. So I also think, yeah, I think this guy's, I think he's 23. Dude, you're crushing it, bro. You're crushing it at your job. You already got Bitcoin, Tesla. Dude, I feel like you should be telling me what to do. All right, next question.
Hey Gally, hope all is well. It's Luke. Great to have you back on YouTube. Been following your channel since 2018. Just wanted to get your thoughts on two things. First, its valuation. What do you see as a fair price when investing in a long-term innovative business? Is it growth, margins, profitability, cash flow that you're looking at? Do you have any financial metrics that you prefer? From my experience, I see the macroeconomy having quite a huge impact on stock prices, but sometimes, as even Warren Buffett says, I think it's better to buy a wonderful business at a fair price rather than a fair business at a wonderful price. Long-term stock prices should technically follow the business profits and growth. So it's basically the first one would be a question about valuations in the stock market. Secondly, it would be also great if you could share your thoughts on the current AI developments and whether you're looking at anything in particular in the space. Nvidia are a huge beneficiary, but I'm worried that it's bringing forward demand, creating tough comps 2 years down the line. I'm really excited with what Meta is doing with Llama, integrating AI in their huge suite of products, which are used by billions of people worldwide, whilst also innovating on the AR and VR front. Some are also debating whether Google might start losing some of its monopoly on search with all these new AI agents diverting user queries to them. Remains to be seen given the imminent launch of Gemini and Google DeepMind division's expertise. Would be great to get your take on how you see these things playing out in the AI field and whether you're looking at any business in particular in this area. Thanks, Gali.
Wow. Okay, this guy is scheming. A bunch of questions there. AI, and then how to analyze a company. So I think this is one of my favorite analogies that I just came up with that I think most people think is kind of dumb, but I like it, which is each company is a Pokemon. They're all unique. They're all different. You got to appreciate them for what they are. Some are going to be good at some stuff. Some are going to be good at other stuff. They're just collections of people. Ford outsources building their cars to other people. They don't own their customer touch points. They have dealer networks versus Tesla, all vertically integrated on technology, owns their own stores. Yes, they both sell cars, but Tesla also has charging. And they have, you look at what these Pokemon are as just assets they own and how they operate and what value they have on the supply chain. Totally different. So what kind of Pokemon am I looking for, aka companies? What are the characteristics? High margin. Shit where you have fixed costs that stay fixed, but the revenue and gross profit can scale irregardless of your fixed costs. What does that look like? Facebook. Best example we've ever seen. $100 billion, losing money, most ridiculous overvalued IPO ever. Now they're worth insane amounts, making huge amount of money because the amount of coders in Silicon Valley doesn't have to change really for the amount of people using their platform. They have what we call operating leverage. Every incremental dollar in revenue above a certain threshold goes pretty much right to the bottom line. That operating leverage is basically my favorite thing to look for. So I think Tesla has that too. Once they're paying all the coders, all the people at the factories, all their employees, every incremental gross profit from their cars goes to the bottom line. That's why we've seen their margins expand. So I love software platforms that have a fixed development cost but can scale to a lot of users. I think you have huge leverage there. So, I think about one of my investments in Rainbow, the crypto Ethereum wallet. Well, I love that because it's a team of elite SEAL Navy kind of coders. And I just feel like they can keep that team super lean and small and then scale to millions of users, and all those incremental user dollars go right to the bottom line. So I love those kind of businesses. And I think TAM, honestly, okay, the other thing I look for in the business isn't any of those metrics. And I've said this before on the show, but it's leadership. Who is the CEO? How hard are they hustling? Who is that entrepreneur? Do they have what it takes to go all the way? Are they going to, business is war. Are they the general you want to bet on? I think that's another big thing. Okay, AI. Ooh, also keep your questions shorter than this. This was 2 minutes, so I'm letting it slide, but shorter questions are better if you want to get on the show. But this was a good one. But AI is changing the game. I got to be honest, this is one of the biggest innovations I've seen ever since investing, and I think we haven't seen how it's going to affect things, but the corporate organism that is a company is going to get drastically changed by AI. You need way less employees to do the same things. I think OpenAI, I use ChatGPT all the time, think it's an amazing product. I think it will disrupt Google. Google's in a really shaky position right now with X coming after YouTube video, OpenAI, Perplexity coming after search. Perplexity is a startup that Bezos invested in that's kind of like Google. That's been getting a lot of waves recently. So, I don't know how this AI shit's going to play out, but I think it has profound impacts on what a company is. People like Elon Musk are saying the era of money and that kind of stuff is over. We just have prosperity because of AI, and we shouldn't even be doing G to a milli. It's crazy. What I personally think is happening is we're at this crazy moment where companies and individuals who control technology get more powerful than governments. And that's very scary. And it's in uncharted waters, but that's where I think we're going. It's not even the haves and have-nots gap gets wider, but it's just like a few key people like Sam Altman, Elon Musk, the Google founders, Satya Nadella. These people have insane power, insane influence, and I think that grows exponentially in the era of AI, and I think you're going to see governments intertwine with companies in a way that we've never seen before because of AI. This is just going to get crazy, and maybe I'm like a Luddite that's like, oh my God, this is scary, put the cat back in the bag, but I think this shit's scary, and I think we're going to a really weird future utopia where every job may become irrelevant. And to be honest, that's one reason why I'm doing GTO Milli and putting assets in Tesla. Maybe I should buy some Microsoft stock now that I say this, because those are the companies and assets that I feel like will benefit from AI taking off. Or will some startup using AI just figure out how to build a better, cheaper car with just AI robots? Even though it seems like it would be Tesla to do that. But, you know, where does this AI arms race go? Where does the value accrue? We're very, who is it? NVIDIA with the chips? Is it OpenAI with the model and the UI? Is it Tesla with the humanoids? I mean, fascinated to see how all that plays out. And we got a couple, I got to go to my sister's for dinner, but I want to do a couple more questions. Let's see what's good with this.
Hey, Gally, Jamie here. Been a fan of the show since early days. Had a great time investing in Tesla with you and going on that super exciting run there. I wanted to get your thoughts on Rivian and what it would take for Rivian to be, you know, somewhat like Tesla in terms of excitement. What's going to get you stoked on Rivian? What do they need to do? What are the top 3-5 things that you would like to see? Thanks.
Dude, love this question. Okay. Rivian, what do they need to do to excite me? Stock price needs to go down. Valuation needs to get cheaper. I need to see improved profit margins. That's just off top. I was in the Rivian store a couple days ago in U Village in Seattle. Baller. Love the vehicles. Love the brand. Love the vibes. Love the little touches to the product, like the flashlight in the door, the quality, the design. They're not copying Tesla. They're going for their own niche. I love that. I've been a Rivian, you know, hater but fan since I've toured the factory. I went to the launch party, which Rihanna was at in LA like 5 years ago. Like I've been following this so closely, and I've been extremely impressed at how Rivian has brought some shit to market that is a compelling electric vehicle that's different than Tesla. Huge props. Financially, they're losing way too much money. We might be able to see a turning point in the gross margin and cash burn in the next few quarters if they can get their volumes up. That's why I was so bummed that delivery numbers were weak. So if you can get the R1T, R1S to 70,000 units a year, delivery vans start taking off, R2 gets unveiled, profit margins go in the right direction, e-bike is launched, I think Rivian has huge potential. The other flip side of this is, I love the Peter Thiel quote from 0 to 1. The next Mark Zuckerberg is not going to build a social network. Why is everyone trying to find the next electric vehicle company when we know the next great electric vehicle company? Guess what? It's Tesla. Guess what? The one product they just launched, the Cybertruck, is going to provide more value than all of Rivian as a company. And that's just one of their products. So here's how the Rivian bull case takes off. If the R2 is extremely successful and that crushes it, and it becomes sort of like this Subaru Jeep, you know, electric version of a Subaru or Jeep that's Rivian, that's 40 to 50 Gs with good range, good quality, you know, access to Tesla supercharging and Rivian's network, that could be the car that takes them to a $50 to $70 billion value. Right now, Rivian's trading for like $20 billion. So I think there's too much risk for not enough upside. And then you have the counterpoint of self-driving. I think longer term, the idea that humans won't drive is super important. And Rivian doesn't, to me, have a clear strategy like Tesla does to try and address that. They don't have Tesla bots. They don't have energy. So I think Rivian's a super interesting player. The price sales multiple is compressed here, 20 billion, 5 billion in sales. You're looking at, 4 times price sales. I love that, but the sales are super low margin, and they might have to dilute more to keep funding the company. So I think Rivian's getting a lot closer to my sweets. When they IPO'd, I was like, price target's 420. I hate Rivian. Well, now the stock price has come down to $18 a share. The revenue is scaled from 0 to 5 billion. The product is amazing. People love it. I see them on the roads. They're badass. The brand is becoming a number 2 to Tesla in the EV space, which I think is massive. I mean, I'm a lot more bullish and convinced on this as a potential investment than I was when they IPO'd. I'm still not ready to take that leap, but yeah. Anyway, I hope that answered your question, but those are the things I want to see. increased deliveries and increased profit margins with mega hype and execution on the R2, then I think we got a huge company. And maybe I missed the upside because I'm too picky and I wait too long. So we'll see.
Hi, Gally. My name's Gary. I'm based in Plymouth in the UK. I'm a first-time caller, long-time listener. Love what you do, by the way. I love your energy, love your passion. I've learned a lot from you. I'm in my 50s. I've been investing in Tesla since 2014. So I put my entire net worth into Tesla around about 2014, and I've been dribbling it in ever since. So I understand what it's like to see volatility in a stock that you love, but I've done an awful lot of research into Tesla, and my conviction in the company is just building every day. The company gets stronger and stronger. One thing I'd like to say is I think it would be important for you to tell your listeners that it is important to put their investments, if they can, into some sort of tax-efficient wrapper, because if what you say is true, and I think it is true, that you build a snowball and you invest hard until it hurts, you could end up with a very big pile of money, but a big tax bill. So perhaps this is something that you might want to just talk to your audience about. Okay, Gally, thanks very much. Love what you're doing. Keep it up. Peace.
Gary, shout out because you have the exact or similar accent to my friend Scott's dad, Graham. So shout out to Graham, legend. But interesting question here, and I feel like I already kind of answered it, which is if you can exploit a tax-free efficient vehicle and have a Roth IRA where you're not taxed till retirement or you have tax-free, go for it. Like, ask your person about that. That's not my move. I personally don't give a shit about that because I think if you're playing, and this is what I say to people who like, ooh, I'm going to move to like Austin because the tax rate's better. It's like, bro, talk about a loser move. Like do what you want to do, and then don't let the tail wag the dog. And so, yes, I'm going to have to, every time I sell stock, 30% of the profit goes to the US government. That's just the way it works. And I'm calculating that in, and I got to deal with that. And if I could put it all in an account where I don't get taxed after I'm 59 and a half, like a Roth IRA, I think that's a move that a lot of people should do. But yeah, I mean, I'm not personally doing it here because I want to cash out of my G2 a milli way before 59 and a half and have more freedom. So I'm just going to bite the bullet on taxes. But if I do go G2 a milli and then I start taking money out of my account and start selling my Tesla when it's way up, I got a big tax bill to pay. And that's important to keep in mind. So, yeah. Don't be like, go from a G to a milli. This is the real lesson here. Don't go from a G to a milli and then be like, oh, well, I have like, $1 million, so I'm going to buy $1 million house. It's like, no. Buy a $700,000 house because you're going to have to pay 30% in taxes. And if you just keep that in mind or remember that and keep that in your calculation, that'll keep you safe. Just remember that you have a tax liability and got to pay, 30 to 40% of your profits, set that aside for taxes. And that sucks, but it is what it is. 2 more questions. I'm doing them all. Let's go.
Hey, what's up, Gally? I've been following you since 2019 when I started buying Tesla. I feel like we made it through our generations.com bubble, and I feel good that we're still came out of the other side and maybe a little more humble and wiser. But anyway, I still have most of my Tesla. I sold a good chunk of it, put it into Microsoft because I think Microsoft it's hard to argue with the amount of GPUs they're buying, and I think they're building a brain on a massive scale, and I think they and OpenAI are winning the race to building our successor species. So anyway, I wanted to ask you about Coinbase and crypto in general. I have been on the sidelines for crypto for years, and I've always found it interesting. I just don't understand it well enough to invest, just like you've talked about with Lemonade. And I just want, like, if its thesis is to become a global currency, how come I have never once seen somebody buy a meal or pay rent with Bitcoin? It just seems super difficult and impractical to use as a daily currency? It feels like a stupid question. Maybe I'm missing something. But I mean, yeah, I'd love to hear your answer to that specifically, but also would love to just have, like, if you feel up for it, making some deep dive videos about Coinbase and crypto, because I think, like I said, I think they're both super interesting. I just don't get it enough. So anyway, thanks for all you do. Would love to hear your thoughts. Have a good one.
Okay, this is super interesting. I think important to not buy what you like. Know what you don't know. If you don't know crypto, then stay away from it. Or that's what I would do. I think you don't buy what you don't know. And the store of value thing. So I've never seen anybody use crypto for a payment. So I think we live in the United States. So we have the least inflation and we have the most robust infrastructure for like dollars. It's the main currency. So I think that the value for Bitcoin right now, if you're really transacting and storing value, it's in all these third world countries where inflation's off the charts. You're going to see a lot more Bitcoin adoption for payments and that kind of stuff. So I think that's one thing. B, I think Bitcoin and crypto payments is just one layer. We're like 3 levels above and before that right now, which is store of value, wealth. So it's not used for everyday transactions, but literally to store value. The economic energy you create, how do you store it? Bitcoin and crypto is a way to store that. And so I think that's like digital gold, and that's why I think that's what my piece is, why I started this episode is I don't know if Bitcoin or crypto will be used for all payments, but I think it could. I just think the dollar's working great right now, but it could if the dollar destabilizes or we're on Mars or whatever. But beyond that, I just think this idea of store of value, my dollars are a melting ice cube that's melting faster and faster. Bitcoin is not. And it does have this crowd sort of game theory of more and more people have to get involved. So it is kind of like sketchy that way. But I see humans' trust in code and an algorithm and a mathematical equation backed by energy, which is really what backs the Bitcoin network, is the energy you need to hack it, the hash rate. I love that. But I think but also it's like, people ask me all the time, it's like, yeah, explain crypto, explain Bitcoin or whatever. And it's like, honestly, like, if I start explaining it, you're going to think I'm rambling, and it's just, maybe I don't understand it, which is why I can't put it simply. Like, if I try to put it simply right now, it's like, well, it's a system, Bitcoin is just a ledger. It's a system. Bitcoin is like an Excel spreadsheet of who has what, but the reason why that Excel spreadsheet has value and why we're all buying into it is because that Excel spreadsheet is backed by energy. And everyone around the world has all these little servers that are making sure that spreadsheet's exactly right. And when you buy a little bit of into that spreadsheet, they're going to make sure that you're the one who bought it and it's exactly as much as you said you were going to buy, and that's how much hit your account. So it's this, what you're buying Bitcoin in, and the whole idea of it is trust in a new system. And so that's backed by energy. Bitcoin can get hacked, and so can any crypto as long as you own 51% or whatever, or control it. But it's harder and harder every day to get 51% potential to take over the Bitcoin network because the energy consumption of all these servers keeps going up. So you have to get 51% of this ever increasing massive energy. You couldn't even, but it's all decentralized. So that's where the value lies. But I don't know if that makes sense. Like, I work so hard for economic value, and so do we all, and economic energy. And a lot of us could store it in dollars or ownership in companies, that's stocks. Or is there a new mathematical equation backed by energy where we could store economic value that's a lot simpler for everyone? And that's the promise of Bitcoin. But I think even though Bitcoin's $800 billion, it's still an $800 billion experiment. And that's what I love about when I first heard about it, was like, this is the most successful experiment in the history of economics. Bitcoin. Like, you put this little thing out, now it's doing billions, almost $1 trillion in value. It's created all these copycat coins, piggybacking on its technology that are also worth hundreds of, it's like the most wildly successful economic experiment of all time. I saw Bitcoin, and the first time I got introduced to it was, shout out to my professor, Lawrence Lenahan at NYU, one of the only classes I fucked with at NYU. And we had Charlie Shrem as the guest speaker and Alexis Ohanian. That's right. These guys are legends. They were the guest speakers, like, in front of me IRL in my class. And Bitcoin was at $30, hitting the all-time high of $30 in that class. And I remember being like, holy shit. I didn't end up buying any till like 300 and then 500. But now Bitcoin's at 40,000. You know, the news is like, Bitcoin had a bad day. It's only 27,000. And I'm there like, bro, the first time people told me about this, shit was at 30. Like, it's hard to even know assets gone from 30 to 26,000. So I've been tracking it. And so, but, you know, not just because it has gone up is why it's good, but it's like, you know, at the end of the day, we're just students of the market. And all you can do is just watch the stock market, which is one of the most efficient weights and ways to allocate capital in the history of our civilization, and just appreciate it and say, I will not understand it, but it's right. And so when I look at Bitcoin and I see $800 billion and I see all these people using it, I'm like, oh my God, like if I say Bitcoin's dumb, I'm an idiot because I'm ignoring this thing that's worth almost $1 trillion, a number of value that I will never create my whole life. So studying it, understanding it, or not even studying it or understanding, but just like trying to wrap your head around what this is, why are people with dollars buying this code, is interesting to me. I just think it's so fascinating. And so, and then, you know, why am I bullish on it? Why is 50% of my G to $1 million crypto? Because I just think the U.S., my trust in the U.S. dollar, which governs the world economic system, is declining. And I think people would rather trust an algorithm that we can all open source and verify backed by energy than our government. And Bitcoin doesn't have a military. That's the one thing it doesn't have going for it. But other than that, I see a future techno-utopia, you know, I think, was it your question that you just said, like OpenAI and Microsoft are creating the next version of human? I think that next version of human is going to use crypto and a systematic equation they can understand, not a currency that's backed by, or, you know, where interest rates are decided by this thing called the Federal Reserve, where it's just some white dudes in a room deciding what the number should be. Is that really the system where we're trusting all our value we earned our whole lifetime, or is it Bitcoin? Anyway, I'm getting sidetracked, but this is a fascinating debate. I'm gonna get back into later. I'm gonna be thinking about this question. So I really like that. Okay, I think I have one more, and I'm just gonna do it, and then we've got all the questions. This is huge.
Gally, what is up? Tom from New York here, long-time listener, first-time caller. First of all, I want to thank you for introducing me to Tesla as an investment back in 2019. It really helped me make some smart decisions. Now, my question for you is, can you give some examples of how do you compound your growth here with this portfolio? I understand the investing part, but I'm not so sure on the compounding part. So maybe if you could, you know, kind of explain maybe a little strategy for that, I'd appreciate it. So yeah, thank you so much for everything. Love you, buddy.
Okay, great question here. I mean, I don't know. I'm trying to understand like what this question really is. It's like, shout out for the question though. But I think investing to me is compounding. It's the idea of you make money, dollars are melting. You want to put your money into something that's going to grow or retain its value. And then as that thing kind of grows, you're compounding your gains on that thing, and they just keep getting bigger. And if it keeps growing, and it's just this idea that, you know, 1 times 7% gains is going to be $1.07. But then the next year, 7% on that is going to give me like, you know, an additional 7.2 cents or whatever. And so compounding, I don't know how to answer this question. I mean, compounding is the idea that your money works for you, and that at a certain point, like, you just keep adding up these percentage gains every year, and that's how you build massive wealth, is investing in things where the value compounds. You know, every time Tesla gets money for a new factory, they don't just pay it out. They reinvest it into an even bigger factory, into an even better product, into an even thing that makes even more money. And then that little thing that you invested in compounds, and little by little, compound is just a word for like growth over time layering onto itself. And so you want to lean into things where growth layers on itself over time and value starts to snowball into this massive thing. I don't know if that helped, but that is what it is. Okay. Anyway, this wraps up my episode. Longest episode so far. I had a blast doing it. Also, shout out to my pickleback that I was drinking. I don't know if that made this less or more fun for y'all, but let me know in the comments. And Public, shout out to them. If y'all want to join, roll your snowball with me, public.com/hyperchange, 25 new bucks. or $25 that you get in a slice of stock if you sign up using my code, and then I get $50 that I'm going to put into my portfolio and start compounding. So support the show if you want to do that. Let's take a look here. We're at 27.19 as the value. Can't wait to see where we're at next time. Let me know if you have ideas for stocks, for anything, for questions. Keep it coming. I'm loving all the questions. Email me if you have a question and want to get on the show. If you have a question, want to get on the show, I literally just answered every single question, like 10, 12, whatever. I don't know how many it was. I caught up on them all. So if you have a question right now, I'm still answering all of them, I guess. Email me an audio recording to hyperchangetv@gmail.com, hyperchangetv@gmail.com. Audio recording like so many of y'all are doing, or if you're my homie, you can text me and I'll use it, but that's anyway. And you'll get featured on the show. Like, I love building this community. I love hearing from y'all. It helps me scheme a lot when I get these like ideas and little things to riff on. So you're doing me a huge favor. And I make my show by myself in my house, and I'm a social person, and I love people and just interacting. And it makes me feel better when I hear your voice on the phone and you're like, yo, what's up? Gally, how you doing? So this is my thing I'm scheming on. Like, I love that, and it makes me feel like we're building like a community. So I appreciate that, and I think it's hella fun. And this is HyperChange, G to a milli. We're at 2.78 Gs. We're booming, y'all. We're booming. Hopefully we're catch up to S&P 500 and slash as much as I originally invested. That would be nice next time. But see you next time. This is HyperChange. Actually, I hope I'd not. I hope all my stocks crumble by the next episode so that I can buy them cheaper. Almost messed up there. Anyway, see y'all next time. Peace.